What's the deal with, presumably, a small bank in California? The majority of people here have never even heard of it. The entire international banking sector has been swept up in the viral sensation of today's video in just 24 hours. Let's reassess Silicon Valley stock. We learned after business hours that corporations had been withdrawing funds from the failing bank the day before. Silicon Valley Bank's stock price plummeted by 60%. We'll explain why the stock price fell by 60% and is now down 30% in pre-market trading. Top U.S. banks such as Schwab and J.P. Morgan saw their market capitalizations fall by $50 billion in a single day as this occurred. J.P. Morgan dropped 5%. Schwab fell nearly 13%. It's been a total slaughter. When people lose faith in a bank, the bank ceases to exist. There's a reason you've never heard of Silicon Valley Bank. They only work with high-growth companies like startups and venture capital firms. This specialized product is based in Santa Clara, California. While this isn't news, the entire growth tech industry has seen a meteoric rise in valuation since the pandemic of 2020-2021. And the bank has risen in tandem with it thanks to low loan rates and an influx of cash from the government's investigation of a shindig. Right. As a result, the Silicon Valley Bank was very successful. Deposits will reach $200 billion in 2021, a 90% increase over the previous year. The party, however, ended when the Fed turned off the water, the parents returned and turned on the lights, and they threw everyone out. In general, 2022 unfolded in this manner. When the Federal Reserve took action, the period of easy money came to an end. It tightened its grip, and interest rates rose dramatically. When the easy credit era ended, the burgeoning technology industry and Silicon Valley Bank both crashed like grandpa at a New Year's Eve party. During the past year, the SVB financial statements have clearly gone from looking like a rock star to looking like Swiss cheese with a lot of holes. As of December 31, 2022, the fair market value of available for sale securities on SVBS's balance sheet was $26 billion. $2.5 billion less than the $28.5 billion the bank paid for them. The bank had securities held to maturity with a fair market value of $76 billion, which was $15 billion less than the balance sheet value. To put it another way, within a few $100 million, give or take. SVB now has a debt of approximately $17.5 billion, which exceeds its total equity of $16 billion. That is obviously not a good thing. That's not good, whether you're speaking with your banker or the grocery store clerks down the street. That's not good, whether you're speaking with your banker or the grocery store clerks down the street. People's trust in the bank has dwindled, deposits have dried up, customers have fled, and the institution is struggling due to a lack of new capital. Every bad bank has a similar backstory, which you are already aware of. It's the old story. With that in mind, it's not surprising that deposits fell 13% in the final 3 quarters of 2022. And, as of the time this video was created, they will continue to fall until 2023. Unfortunately for SVB, Standard & Poor's was forced to finally wake up and lower the bank's credit rating. They took their protest down a notch to the level of garbage. Moody's quickly followed suit, as this is a highly competitive market. They explained that they were lowering SVB's rating because the bank's funding liquidity and profitability were deteriorating, venture capital investments were declining, and so on. Mr. or Mrs., thank you very much. Obviously, that was the case, and we were all aware of it, but what triggered the initial alarm, resulting in this explosion? Not like the catastrophic insanity we saw the day before. It was, indeed, something entirely different. SVB disclosed on March 8 that it was selling all of its securities for sale because it desperately needed cash. Following that, the situation rapidly deteriorated. Customers have been assured that there is nothing to worry about. Nothing is more soothing than a panicked CEO yelling at their employees to stay calm, so SVB's CEO came out and urged everyone to do just that. Right? This alarmed the bank's venture capital clients, particularly Peter Thiel, who reportedly urged his funds to withdraw as much money from the bank as possible as soon as possible. After other smaller VC firms followed suit, the stock price of SPP dropped by 60%, the largest drop in the last 7 years. which a key VC participant, the Founders Fund, is advising its portfolio companies to withdraw their funds from Silicon Valley Bank. The stock price is currently down nearly 30% in pre-market trading, and it appears that the decline will continue. According to Bloomberg, the unnamed startup CEO stated today that he attempted to withdraw millions of dollars from SVB yesterday but was unable to do so. Nonetheless, Bloomberg reported that numerous other bank customers told them they were able to withdraw their funds without incident on Thursday. If you want to know how bad things are, consider that Bill Ackman called for a government bailout of SVB yesterday. Despite the fact that Bill Ackman isn't always a reliable barometer of how bad things are. Remember the whole, this guy's falling thing they did back in the day. This is simply my opinion, so take it with a grain of salt if necessary. There's a hint of a bank round developing here, and no one wants to be the guy left with the nuts if that happens. Draw your own conclusions from this story with caution. How bad can things get? Is this the end of the road for SVB in this type of game? What impact will this have on the stock market as a whole? However, there is always the possibility that SVB will run out of money and be unable to function normally, in which case it will be sold to a competitor or dismantled into its component parts. However, I believe that this is an overreaction at this time. In fact, the stock sale that they did brought in a lot of money, which should be enough for SVB to function for a long time and stay afloat, and this is what sparked the whole show storm. But, what about the rest of the industry and the larger market, I believe, is the more intriguing question. That's a bad sign for the market's long-term health. More concerning, SVB is not alone among financial institutions in this situation. Not only did they incur a large number of unrealized losses, but so did other banks. Meanwhile, the entire banking industry is holding its breath, hoping that things do not worsen. Many institutions are sitting on significant unrealized losses, which are akin to a ticking time bomb that they desperately hope does not go off. I can't tell you what will happen in the future. As far as I can tell, this is nothing more than a massive gas canary in a small brain. As is customary, I'll end this video by warning you of impending doom. See you in the next one. Hit that like button on the way out, and subscribe to that other channel as well.